Let's start today's topic. Three pillars of GST. That is, under the goods and service tax, we are having three important pillars we are going to discuss. So, first of all, GST, it is an indirect tax which came into effect on July 1, 2017. And GST was introduced to replace the hassle of multiple taxation happening in India under the slogan of One Nation, One Tax. So this is a main priority we have to given in the GST regime. We have to make the taxpayer was required to file forms such as central excise duty, service tax, state, VAT, and service taxes, etc. So based upon these all the GST, it is coming under the one structure, that is a one umbrella, that is a one stage based taxation system. It is categorized under the CGST, SGST or IGST. CGST is nothing but Central Goods and Service Tax. SGST means State Goods and Service Tax. And IGST, it is nothing but the Integrated Goods and Service Tax. It is based on the whether the transaction is happening upon the interstate or the intrastate. So the main applicability under the three pillars, it is nothing but to determine the applicability of the CGST and the SGST, and also making the IGST. It is crucial to know if the transaction is based upon the intrastate or an interstate region. So interstate supply, what is called interstate supply is nothing but when the location of the supplier and the place of the supply or the location of the buyer are in the same state, it is known as the intrastate transaction. So supply and also the buyer, they have to making in the one particular the same location. So that particular supply of goods is called the intrastate supply. For the intrastate transaction, under the seller is required to collect both CGST and SGST from the recipient. Recipient is nothing but the receiver, which is deposited to the central and state government respectively. So next we move to the interstate supply. That means when the location of the supplier and place of the supply or the location of the buyer are in different states. Example, we are taking supplier, that is the person, they have to resided in Tamil Nadu, but they have to get the buyer, they have to receive the goods in Kerala. So these are the some different states. It is known as the interstate transaction. So moreover, in case of import or exporting the goods or services, it is made by the SEZ, that is Economic Zone Unit. Okay, so that particular transaction is considered as interstate. For the interstate transaction, the seller is required to collect IGST. So IGST is nothing but we have to pay the CGST as well as the SGST. So when we move to the some important revenue generation under the three type of tax structure. So what are the three types in the sense is nothing but based upon the CGST, they are tax levied on intrastate supply of both goods and services by the central government and also will be governed by the CGST Act. Next is GST. So under the taxes levied on intrastate supply of both goods and services by the state government and will be governed by the SGST Act. And under this SGST, we have to note some important point, that is any tax liability obtained under the SGST can be set off against the tax input tax credit only. And next we move to the IGST. Under the IGST, the tax levied on all interstate supply of goods or services and will be governed by the IGST Act. It is maybe applicable on any supply of goods and services in both cases of import into the India and export from outside India.